I'm Mortgage Mark. Let's talk about acceptable funds that can be used when buying a home and then the funds that can't. I'm actually going to start with the can't. So first and foremost, there is an entire asset documentation section where we kind of talk about some highlights of what you can do to make your life easier when it comes to this type of paperwork. Check that out. But in there, I'll reiterate here, paperwork for bank statements and things of that nature is probably the most annoying part of the mortgage process. There's certainly a lot of bad parts. This is up there with like one of the worst. And the reason being, guys, is just everybody's bank statements can be different. Their asset statements can be different, and where they get the money can be different. So let's talk about where you get the money. What is acceptable and not acceptable? The not acceptable, cash. If you got like 20 grand sitting at home, I've once talked to a guy that had $150,000 in cash in his bank account or in his safe at home. That's crazy. Good for him, but crazy. So for me, as a lender, we have to be able to document funds. Now, what that doesn't mean is, hey, I got this cash, I'm gonna go throw it in there a week before closing. Nope. Again, even if it's in your bank account, doesn't count because it's basically considered cash. It needs to be sourced and seasoned. So call us, guys. If you got cash and you're thinking about buying a home in the near future, throw it in the account, because ultimately, in most programs, not all, but most, they're only gonna require about 2 months bank statements. So if you do that and you throw it in there like 5 months prior, we'll never know it was cash. And that's fine. That's good. It's sourced at this point. It's seasoned. It's been in the bank account long enough to know. So just realize past 90 days is probably not going to come up on the radar. And the reason why I say 90 days, when we get 2 months bank statements, remember that the older one is going to say what a average or previous month's balance was. And so it's kind of like an insight to the previous one. So if your average balance went from X to X times 5 because of that deposit from 88 days ago, we may be asking questions, and suddenly you're going to shoot yourself in the foot. So if you got cash at home, get in your bank account long before you end up going to buy a home, just so that you're ready for it. Other unacceptable sources of funds, it's really anything we can't document. It could be like a loan that you're going to get from a credit card. Hey, I took a cash advance on this. Guys, if you do it long before, hey, again, like go back 4 months, 5 months, you took a loan, and it's in your bank account, now it's sourced and seasoned. And then wherever you got that loan from, if the payment's showing up, we'll count it. If it's unsecured loan, hey, my dad let me borrow $50,000, I'm paying him this monthly payment. Nope. Guys, unsecured loans don't count, especially from family members. At that point, you may need to talk to dad and say, let's make that 50 grand a gift. There's a whole section about gift funds. Check that out, about the right way and wrong way to do it. So really and truly, if you guys have any questions, let us know. But the good ones, just so you know, anything from your employer, from the VA, Social Security, the IRS, like a tax refund, something that is common and normal, like those are easy to document. And even if it is gift fund, if dad says, hey, here's 50 grand because I love you, there's a right way to do it. Just let us know. So really, guys, again, this is the biggest bone of contention when we go through doing mortgages. It's just the biggest pain on our side and probably yours. Call us, let's talk about it and be very specific. Let's make sure we review this, watch these videos, and let's just knock this out. Let's have it, let's make this a 10-minute process and not like a back and forth for days. Call us. Look forward to working with you, and we'll do our very best to make this an easy process for you.